Okay, we're going to be doing chapter 4 today from 80 Banker, the life policy options chapter. And as normal, we're just going to go through the questions. So these are actually, we'll go through these really quickly. The stock insurance company is a company owned by the stockholders, so it's traded on the one of the stock exchanges. A mutual company is owned by its policy holders.
Stop screen sharing, Nicole.
Oh, I stopped screen sharing. Thank you. So the stock company is owned by its stockholders. A mutual company is owned by its policyholders, and they get non-taxable dividends, which are really return of premium. So if the cost of it ends up being, let's say, $98 and you paid $100, then they're going to give you $2 in dividends back. Part of their plan is always to sort of overcharge you slightly and then give you dividends, non-tax. Fraternal insurers, primarily a social organization that engages in charitable and benevolent activities. A blank insurance company is owned by its policy holders. Go ahead and yell out if anyone knows it. Mutual. Its members, also called policyholders, own a mutual insurance company. We've done this before. I remember we did get through this chapter. So domestic is in the same state. Foreign is in the United States other than that state. And then alien is outside of the United States. So I'm actually looking to get licensed in Canada. So I'm going to end up being they will be an alien insurer to me if I can figure out how to do it. Which of the following is an insurance company that is organized under the laws of a different state within the United States? Authorized, alien, domestic, or foreign? Are you guys there?
I say foreign.
So foreign is inside of the United States. Just remember alien. That's not a really PC way to remember it, but aliens are like illegal aliens coming from out of the country. And then domestic is obvious. It's domestic within the state. So if it's under the laws of a different state within the U.S., then it would be foreign. Foreign insurer is not organized under the law, whereas a domestic insurer is organized under the laws of the state in which it is writing insurance. The Fair Credit Reporting Act is to protect consumers' rights to privacy. So they're going to come out with options like a Privacy Protection Act or something. Just always remember the Fair Credit Reporting Act is where privacy is, privacy of credit and financial information. Patriot Act and anti-money laundering. Any transactions over $10,000. A federal regulation called the blank protects consumer privacy. Consolidated Omnibus Budget Reconciliation Act, Fraudulent Insurance Act, Fair Credit Reporting Act, or Privacy Protection Act. See how they did it already? So remember what that answer is? Fair Credit Reporting Act. The Fair Credit Reporting Act financial, accurate, relevant.
Your mic is going on my end. I'm not sure if that's me.
Oh, that could be me. Hold on. That should be better.
Coming in loud and clear.
Yeah, I got to remember to do that. For life and health insurance, insurable interest must exist at the time of application, loss, policy delivery, or application and loss.
Application.
That's right. Insurable interest in a life and health insurance contract must exist at the time of application. So actually, let's go in here. Elements of contract law are they must be competent parties. They have the legal capacity to enter into a contract. Legal purpose. Insurance may not be used for illegal activity. There's an agreement. There's an offer and an acceptance. A legal contract requires an agreement which includes an offer and an acceptance. Typically, a person, the applicant or insured, makes an offer by submitting an application to the insurance company for insurance along with the initial premium. In this case, acceptance takes the form of the approved application allowing the policy to be issued. The premium and the issued policy together form the agreement. Consideration is the exchange of value that makes a contract binding. The insured's consideration is the payment of premium along with any agreement to abide by the conditions of the contract. The insurer's promise to indemnify in the event of a loss is its consideration as is specified in the insuring clause of the policy. Each of the following is an element of legal contract except agreement, consideration, indemnity, legal purpose.
Indemnity?
Yeah, I don't think we just read about that. The fourth element of legal contract is competent party or someone that has a legal capacity to enter into a legal contract. Oh.
Elements of a legal contract. A legal contract requires 4 elements. Absence of any one can void the contract. The 4 elements of a legal contract are competent parties, legal purpose, an agreement, and consideration. Competent parties. Parties must have a legal capacity to enter into a contract. They must be of legal age and aware of their actions. Specifically, restricted persons include minors, mentally incompetent persons as deemed by the court system, and a party under the influence of drugs or alcohol. Legal purpose. There must be a legal purpose for entering into the contract. In an insurance contract, this means that insurable interest must exist and illegal activities or immoral purposes are prohibited. For example, entering into a life insurance contract with the intent to commit murder would remove legal purpose. Agreement. The agreement in an insurance contract involves both an offer and acceptance. A premium must be paid and a policy issued to form an agreement. In most cases, the initial premium will be paid at the time of application. This becomes an offer. Once the insurer issues the policy, an acceptance of the offer occurs. Sometimes a life or health insurance applicant may submit an application without paying the initial premium. The insurer may issue a policy to make an offer to the applicant. The initial premium can be paid upon delivery of the policy, which constitutes the acceptance. Consideration. Consideration is what 2 parties exchange in value to abide by the conditions of a contract. For insurance purposes, the payment of premium is exchanged for the insurer's promise to indemnify in the event of a loss. A mutual agreement of this consideration is reached when the insurer delivers the policy upon initial premium payment.
Well, these are some funky words. So a contract of adhesion. The contract is written by one party, the insurance company, without any input from the applicant. The insurer prepares the contract and presents it to the applicant on a take it or leave it basis. Because the insured has no input regarding the terms of the contract, it is not negotiable. An aleatory contract is one that is based on the uncertain event or by chance. It can't be known in advance whether the insurer will have to pay a loss during the policy term or whether the insured will make premium payments without receiving anything in return. Both parties agree to the terms of the contract despite the uncertainty. It's very likely that there will be an unequal exchange of consideration by either party depending on if a loss actually occurs and to what extent. A unilateral contract is one in which only one party is legally bound to the contractual obligations. As long as all the conditions are met by the insured, the insurer makes an enforceable promise of future performance and can be charged with a breach of contract if those obligations are not met. The insured has the right to cancel the policy at any time and cannot be legally forced to pay the premiums. Conditional contract. A conditional contract is one in which both parties must perform certain duties to make the contract enforceable. The insurer can only collect if there has been a covered loss and the insurer has a list of conditions stated in the contract that must be met before a claim will be paid. As long as the specified conditions or duties are performed, the insurer must pay the claim. So this is something that was on the last page, but if we learn it here, then we'll be good. A warranty is defined as which of the following: a statement in the application that is guaranteed to be true, a false statement in the application, a substantially true statement, intentional misrepresentation on the application.
A.
Right. So a warranty is like a warrant, is literally like a warranty on a car, guaranteed to fix it. A warranty is a statement guaranteed true in all aspects, and if later discovered to be false, the contract may be voided. That typically happens within 2 years. Match the following terms with the correct descriptions. Warranties, material statements on the application, statements on the policy that are guaranteed true. Oh, a false statement contained in the application is a misrepresentation. Statements on the application that are substantially true, believed to be true to the best knowledge, that's a representation. Based on the uncertainty of a loss, there will likely be an unequal exchange of consideration by either party. We just read about that. So we know this one, only one party is unilateral contract. One party, the insurer, prepares the contract and it's not negotiable.
I think the first one is conditional.
Is this one aleatory based on this? So that's this one or this one?
One party.
Okay, so based on the uncertainty of a loss, there will likely be an unequal exchange of consideration by either party. That's the aleatory contract. So both parties must perform certain duties and follow rules. That would be conditional, I would assume. And then one party, the insurer, prepares the contract and it's not negotiable. That's the contract of adhesion. Match the following terms with the correct description. Material statements in the application or stipulations in the policy that are guaranteed true. We already did that. Requires 4 elements that include competent parties, legal purpose offer, and that's going to be the legal contract. Statements on the application that are substantially true or believed to be true to the best of the applicant's knowledge at the time of application. This is almost exactly like the last one. Representations. A relationship that must exist at the time of application. We know that's insurable interest. Must exist at the time of application. And then a false statement contained in the application is a misrepresentation. Hey, how you doing, Red? Oh, wait a second. What just happened?
We're at the exam.
Oh, right. Woo, boy. The state's blank branch enforces the existing statutes that have been put in place. Enforces the existing statutes that have been put in place. So forget about insurance and just think about how states are set up. Which branch enforces rules and statutes? Judicial, right. Oh, no. Executive. The state's executive branch enforces the existing statutes that have been put in place. So what's the judicial branch do?
Maybe they write and pass them.
Judicial. The judicial is the judges of the courts.
Yeah.
Huh. Let's just. In every state, the executive branch is headed by a governor who is directly elected by the people. In most states, other leaders in the executive branch are also directly elected, including the lieutenant governor, attorney general, the secretary of state, and auditors. So then the judicial branch. Judicial branch consists of the Supreme Judicial Court, the Appeals Court, the Executive Office of the Trial Court Departments, the Massachusetts Probation. What is the duties of the judicial include interpreting state laws, determining the guilt or innocence of those accused of violating the criminal law of the state, acting as a check upon the legislative and executive branches of state government. Okay, so going back to this, it's saying that the executive branch enforces the existing statutes that have been put in place. And the judicial branch decides whether somebody has violated that law, which says to me they are enforcing the statute. So I guess I'm confused.
I am too.
So let's just flag this question. Which of the following best describes a conditional contract? Only one party is legally bound to the contractual obligations. The exchange of values must be unequal. Both parties must perform specified duties in order for the contract to be enforceable, written by only one party.
C.
I believe it's C2. A conditional contract is one in which both parties must perform certain duties in order for the contract to be enforceable. Which of the following is not one of the essential elements of any legal contract? Competent parties, yes. Legal purpose, yes. Offer and acceptance, yes. Indemnity, no. The essential elements of a contract are offer and acceptance, consideration, competent parties, and legal purpose. So the one that was missing here was consideration. Members of the blank include state and territorial insurance commissioners or regulators. Federal Insurance Office, National Association of Insurance Commissioners, the Financial Industry Regulation Authority, Securities and Exchange Commission. So SEC, we know, has to do with securities and nothing to do with insurance. So that's out. FINRA, Financial Industry Regulatory Authority, also has to do with stock type stuff, to keep it simple. That's not insurance. So now the Federal Insurance Office and the National Association of Insurance Commissioners. So FIO, I'm not even sure if it's a real thing, but I deal with the NAIC all the time. So I think it's B. Do you agree?
Yes, I agree.
The NIC is made up of all states and territorial commissioners or regulators. The blank branch is responsible for interpreting and determining the constitutionality of the statutes. Now we know that's judicial now. Oh wait, judicial, legislative. Oh no, legislative are those who make, are these like the Congress people. So that's got to be judicial.
If interpreting, I'd say so, yes.
The judicial branch is responsible for interpreting and determining the constitutionality of the statutes. Okay, so that's the distinction that they have. So they think the executive branch enforces it and the judicial branch simply interprets it. An insurer not authorized to do business within this state is considered what type of insurer? Alien, non-admitted, foreign, or domestic. So if they were foreign, domestic, or alien, then they would be authorized. So the only thing that makes sense would be non-admitted. You agree with the logic?
Yeah, they tried to trick us up.
Yeah, they sure did. An insurer not authorized to do business in this state is referred to as a non-admitted. Foreign, domestic, and alien refer to where an insurer is domiciled. Domicile is not the same as admittance. Dividends issued by stock insurers are paid to members, directors, policyholders, stockholders. Ooh, this is a trick question too. Kind of not really.
Stockholders.
Yeah, it's kind of the obvious one, but when they be the dividends might make you think of mutual, but the dividends are paid to the stockholders because they're the one who benefit. Stock insurers issue taxable corporate dividends to stockholders. Mutual insurers may issue dividends to policyholders, and those dividends are not taxable because they're return of premium. But in a stock insurer example, they are just simply getting that extra money. So if again, in that same example I gave earlier, if it costs $100, if they paid $100 and it only cost 98, in a mutual company, the $2 goes back to the policyholder. In a stock company, that $2 goes to the stockholders. The difference between a misrepresentation and a material misrepresentation is material misrepresentations are considered insurance fraud. Material misrepresentations are issues that affect policy issuance. A material misrepresentation is ground for criminal charges. A material misrepresentation is always intentional. I'm not sure. Insurance contract, a material representation occurs when the insurer makes an untrue statement that is material to the acceptance of the risk and would have changed the rate at which insurance would have been provided or would have changed the insurer's decision. Okay, that makes perfect sense.
Yeah, when they phrase it like that, that makes perfect sense.
Exactly. So material representation are issues that affect policy issuance. It's not grounds for criminal charges. It's not always intentional. You could imagine, I just forgot that I used to smoke, or material representatives are considered insurance fraud. That is not true. They're not fraud. A misrepresentation is any false or misleading statement made by the applicant on the application. A material misrepresentation is a false or misleading statement that would have affected whether the policy was issued at all and may void the policy. Insurance contracts are aleatory contracts. What does aleatory refer to? Ambiguity in policy language, duties and conduct expected of the parties, an unequal exchange of value, a contract written by one party.
By one party.
Aleatory, one by one party. Are you sure on that? I think you're right, but I don't want to have to take this quiz again. Means that something is dependent on an uncertain event, a chance occurrence. Aleatory is used primarily as a descriptive term of insurance contract. And this is contract when performance of the promise is dependent on the occurrence of a fortuitous event. So that says to me, it's an unequal exchange of value, I think. Contract written by only one person was that was the unilateral. So just think of unilaterals. They're going to just unilaterally make a decision. Aleatory means an unequal exchange of value. What's the definition of aleatory? That might help us. Oh, the depending on the throw of dice or on chance, random. So anyone who studied Latin might have an advantage here. So I think it's an unequal exchange of values. Aleatory refers to the fact that because of the uncertainty or risk, there will always be an unequal exchange of value between the parties. The insured's premium payments are less than the potential benefit in the event of a loss. But if a loss never occurs, the total loss of premium payments is greater. A nonprofit corporation without capital stock formed solely for the benefit of its members is a mutual, stock, fraternal, or unauthorized.
Fraternal.
Fraternal, right? Members is always going to end up being fraternal. Now just think of a fraternity like Masons or something like that. A fraternal benefit society is a nonprofit organization formed solely for the benefit of its members and transacts insurance only for its members. In the blank, it is the blank who issues a certificate of authority enabling an insurer to conduct insurance business within a particular state. The state insurance commissioner or director, state senate, secretary of state, state legislature. It's the state insurance commissioner or director. So there's going to always be a department of insurance, and then it's the commissioner who's head of that. So in order for an insurer to operate as an admitted or authorized insurer, the insurer must hold a certificate of authority issued by the state insurance commissioner, superintendent, or director. Stock insurance companies are owned by members, directors, stockholders, policy owners. Just get this in your head. Stockholders. We do not like stock companies. It's no different than any other. Well, I'm sorry, I'm on tape. I removed that. The ownership of stock insurance company rests with the stockholders. Blank manufacture and sell insurance coverage in the form of policy or contracts of insurance. Producers manufacture, no. Agencies manufacture, no. Insureds, no, that's somebody who is insured. Insurers manufacture and sell insurance coverage in the form of policies or contracts. So this is just to make sure that you're not getting confused by the words. Insured is somebody who buys insurance. Insurer is somebody who sells insurance. Insurers manufacture and sell insurance policies through agencies and producers to applicant insureds. Dividends issued by mutual insurance companies represent a share of company profits for stockholders. No. Are considered guaranteed member benefits. No. Are non-taxable refunds, returns of unused or surplus premiums. That sounds familiar. Are taxable distributions to policyholders. So dividends or mutual companies are not taxable. So this is the only option that's available. And this is what is actually true. Since the policy owners also own the company, any policy dividends are paid back to those who paid them in the first place. Therefore, they are non-taxable refunds rather than taxable income. The blank branch writes and passes state insurance laws or statutes to protect the insuring public. Electoral, executive, judicial, legislative. That's got to be legislative, right?
Yes, legislative.
We're not confused on that, I don't think. The legislative branch writes and passes state insurance laws or statutes to protect the insuring public. Now we have to go back to that flagged questions. So now we think we understand this maybe a little better. The state's executive branch enforces the existing statutes that have been put in place. The judicial branch interprets and confirms the constitutionality. Are we on a little better understanding there?
Yeah.
Okay. Okay. So we did it. Any questions, comments, thoughts? Thanks for joining, Red. How are you doing tonight?
I'm doing pretty good. I didn't even know my phone was muted.
Oh, that's all right.
Yeah, I was trying to answer the question. So I got 2 right out of the ones I called. So, you know, I'm catching the tail end of everything. So it's just a lot of catching up to do. That's all.
That's all right. That's all right. We